Hi traders, I'm going to take this opportunity to answer a question that's quite reoccurring that I receive, and this has to do with analysis of the markets, or in particular, what's going on in my head when I'm analyzing the markets. So the first thing that I tend to do is before I even turn on my computer to load MT4, is sit down quietly for a few minutes. Up to 5 minutes is okay, and I would um, besides enjoying that quiet, peaceful time with myself, I tend to have a good feel of what's going on with my thoughts, what's going on with my mood, what's going on with just my energy levels for that day or that particular moment. And the reason behind it is if at any point in time that I feel like my mind's just not on this or my focus isn't there enough for me to be able to trade, then what I might do is I'll go for a walk, I'll go do something else, watch TV even if I have to, but go do something else and then come back when I'm feeling better. Sometimes you just want to drop and do maybe 5 or 10 push-ups, which will energize you enough to be able to say, okay, I'm going to sit back and do this now. So I do that. Other times I will just listen to music. I'd listen to one or two songs, something that is at least 80 beats per second plus, and that will get the blood pumping. That will get your mind back on the game, that sort of stuff. Then I would load my MT4, turn on my charts. Now I really only look at about 6 currency pairs. I've said this in previous videos, and the reason for that really is that I don't want to be wasting my time jumping from one to the other. I tile them on a decent size monitor on my desktop, and when I have that, then I can scan what's going on in every currency pair. Now, with the ones that I have selected, which is Euro USD, Euro JPY, AED USD, AED JPY, Pound USD, and Pound JPY, there is some correlation that happens between them. So if I'm seeing something that's clear on one, chances are the other ones, even if it's not entirely clear, then they may follow suit as well. Okay. It's also important to take into account what time zone you're in. So I am in Sydney, Australia, which is Australian Eastern Standard Time, GMT plus 10. For those of you that like to calculate that, which means that pretty much the Asian session opens with the Sydney Open. So I can trade the Asian session, I can trade the London session. Now I get up at about 6 in the morning or so, or try to at least, which means that by the time New York opens for me, which is 10 p.m., I'm usually tired. Hence, I try not to trade the New York session or the open of it. But if I'm in the mood and if I'm awake enough, then I will certainly have a look to see what the New York Open is like, especially the first maybe an hour or so, um, and that would also determine largely on my ability to have analyzed the market throughout the week and then throughout the Asian session and the London session. So if I know that there is going to be a particular move during the New York Open or into the New York Open, then chances are I might say, okay, look, I'll stay up and trade a little bit if I can. Okay, so that's the first thing. And then what I do is I would, on the 15-minute chart, zoom out and scan through each one of these currency pairs. So right now we're looking at the Euro JPY on a 15-minute chart. This is right now the beginning of the Thursday session. We're in the Asian session right now. This is Thursday, Wednesday, Tuesday, Monday, right? So this is what was going on in the market through Monday. I do this every single day. It's not only when I'll do it, say, on a Monday and then I'll on a Thursday I won't pay attention to it. You really do want to scan what happened in the market over and over again. So I'd go back, even though I did this yesterday, I would go back to what happened on Monday because each time I'm looking at it, I might discover something new, especially with now the benefit of hindsight, where all of this information might help make all of this make sense. And when I'm seeing this again, a couple of things is happening. All of this will now give me more information to be able to predict where this may go, especially going into London and then New York. And two, again, all of this information now is making me better understand what's going on here. And what happens in this case then is that for the next time I'm looking at the markets, then I have more information to make judgments or better judgments in regards to my entries and exits. Now, I've said this before, but I'd like to make this point clear that when it comes to trading, the biggest part of the game really is your analysis. And then going forth from that analysis is your entry and your exit, and that's what the most important parts of every or any strategy is, for that matter, where you decide to enter into a trade, how long for, and where exactly would you exit a trade. Now, the difference that I say that I think the difference that allows Forex to be easier is that with the benefit of analysis, you might be able to pick a directional move that the market is going to make, right? You will use candlestick patterns to confirm that, and then you take your entry. Now, with binary, say for instance you've taken an entry and that the market's pulled back briefly. It might be a stop hunt, it might just be consolidation, might be something that is for an initial period against you, right? If, say, for instance, you've done that and the market enters consolidation for 30 minutes and you've taken a 15-minute trade, well, you probably end up losing that trade. And then, say, straight after that, the market then pushes up again if you're doing a call or a buy when it comes to Forex. Now, you lose the trade in binary, but with Forex, if you analyze the market properly, put in proper stop losses, and you've got an exit strategy in terms of how many pips you'd like to collect, well, chances are you're only sitting and waiting for half an hour before the market does do what you've predicted. Now, if that third candle or third 15-minute candle decides to push up and it goes up, say your 10, 15 pips or whatever your requirement is, um, you take profit, then you're done and dusted in 45 minutes. Whereas with binary, in that first half an hour, you've lost the game. So that's what makes it difficult, in my opinion. Someone asked me, well, Shiva, if Forex is so easy, how do they get you? Well, they can get you in a number of ways. One is if your analysis is poor and you've chosen the wrong direction. Maybe this is a trend going up and you've decided to short the market. That's one. Two is that in most instances, people put in very tight stop losses. And what the market makers will do is they'll possibly, if it's, you've done a short trade or a sell trade when it comes to Forex, the market maker might push the market up briefly and hit your stop loss, which would mean that you've just realized a loss to your account before they move again in the direction of your trade. Much of what is going to happen towards this end here is an unknown, right? So what we've got to be able to do is and figure out is where the market will head according to where it's already been, right? So that's why we use the full analysis. So I will again go back to Monday and I'll do this with every currency pair and then have a good look to see what's happened, to see if, say, for instance, this was a run on Monday from the Asian to New York session. Market pulled back early uh, Asian session and then pushed up again. This here broke the high of New York, pulled back slightly, and then just continued on. Um, Once we're seeing this behavior, well, to some degree, we can say maybe this is going to be a continuation, right? We then look for, now as the week progresses, what we're looking for also is there a point where the market has reached a peak, whether it be up here or down here, and then start to reverse. So what I can make out of this is that this is Thursday right now, this is Wednesday. Tuesday, New York session is when the market seemingly reached its peak, or what we could consider to be the high of the present week, and then the market started to reverse back down. Now, this isn't a clear reversal going south like this. This is a reversal and then sideways movement. So we use all of this and we can say, okay, chances are that the market may either, now this is Thursday, market may either push back up slightly, maybe it will reach one of these resistance areas before it comes back down and correct towards the end of Friday. Now, this is the analysis. This is what I'm thinking. Where is the market going to go? So once I've had a quick look at all of them, I will then go back to each currency pair and then I would see what the confluence is between the higher time frames. So here's on the 15. I tend to generally like going up instead of coming back down. So I'd have a look at the 15-minute chart, and then I'd look to see what it looks like on the 30-minute chart. And we can say, hey, this is the low that was established during London yesterday. The Asian session so far has established a higher low than the previous low. So that is something that's interesting. You might say this market's still heading up. Okay, this also looks somewhat like a W formation, right? Notice how it wasn't so clear on the 15-minute chart. This is a multi-session W most likely, but on a 30-minute chart, it's becoming clearer. Jump onto a 1-hour chart. Okay, zoom in. So here it's also becoming clear. This was the lower point that was established during early London yesterday. Market comes back down, hits a point that is higher than the previous low, and then bounces back up again. We'll jump onto a 4-hour chart. Zoom out. Okay, now here's where we are, but we notice something interesting that's going on with the 4-hour chart. This was the massive W formation that happened. This is, when the possibly the open of the session this week. Now, if we were, say, on Monday, looking at this and we're analyzing, and say, for instance, here during the Asian session, this is where we ended up, then we could have had a good look at this and said, hold on a second, this market has formed a W formation. This, if you can see it, is the stop hunt low that happened Friday during the New York session. So market pushed back up. We're looking at this push, we're looking at this push, and sometime during the Asian session, we could have taken note of this here and said, wow, this is a W formation. We're on the fourth leg. Chances are we can trade this up. So you can apply this knowledge both to Forex and binary. Binary why? Well, if you're trading Nadex or IG, you could take a longer term expiry heading north. On normal binaries now, you're looking to see, well, Euro JPY, chances are this is going to be a continuation. It's a 4-hour chart, so for the next 8 hours, this just continued up. Most of your trades there would have been calls, or should be calls. That's how you'd probably say, okay, this is what I'm going to look at doing, that this would be calls. This, on a 4-hour chart, you might say, okay, this looks to me like a bit of a pullback. Chances are there's going to be a bit of a climb that's going to happen. This 4-hour present candle is a green one, and we still have a fair bit of time before this expiry happens. Okay. The other thing that I note is where the location of the EMA 200 is in every single time frame. All right. So here's what you would look at and say, okay, this is the major W formation that's happened. Chances are there's going to be a pullback. A V is going to develop and the market's going to continue on. You can apply even your your Fibonacci. So I'll get the low point, see where the bounce has been. Now, if I look clearly, see this pullback down on a 4-hour chart has come down to, zoom in a little bit so you can see that. So it's come back down to the 23.6 mark. That's where it's been bouncing up from. Okay, so you could utilize the Fibonacci tool here as well to be able to figure out where the pullback down is going. Where do you think it's going to go from here? So again, you would then utilize this information to apply it to your strategy and say, okay, how does my strategy fall into what the market is presently doing? So that, and then I'd have a look to see on a daily chart as well to see what the market's doing. Over the course of, this is from October 2015, the Euro JPY has been falling. You could start to look at some of this sort of stuff and start drawing in lines as well. Okay, so you could do your trend lines, and you say, well, what's been happening here is that every time the market hits this point, it bounces back up, down again. Hits this point, bounces back down again. Hits this point, bounces back down again. See this massive fall that happened earlier? This is what we see on the 4-hour chart here. notice how on the daily chart it happened right on hitting this trend line. Okay, what do you think is going to happen once this market hits up here? Now, it could be anyone's guess. We could look at a number of things. Now, I would possibly only trade this a maximum of 2 times, the hit and then fall. But can you imagine if you were a Forex trader and you took this trade, it came back down, you possibly waited for a couple of days to see what the market does. And even after this, or after this confirmation candle here, you took a sell on the euro Japanese pair until the market. You could have even traded it up to here or up to here. That's 400, that's 282 or 280 pips in a matter of days, 4 days to be exact. So imagine being able to pick what the market's going to do from these points. Okay, so analyze that. Then I'd go back onto the hourly time frame and see what the market's doing in conjunction with what I've just noticed. So this is a stop hunt low. This is part of the W formation. Go into the 30-minute chart, jump onto the 15-minute chart. Now, see how that massive W looks? That W we saw on a 4-hour chart? This is over the course of almost 2 days now. So that's what we do. We use that information to look at where the market may be going. Once we're back down onto the 15-minute chart, what I started to look for again, one is where is the EMA 200 in relation to my analysis. So it's down here. This and this now gives me more of an indication that this market might be heading up. Okay, it's still a might because the market could always pull down, do another correction or something before it goes up, or the market makers might have another idea, or maybe there's something gets blown up in the world and the market starts to short. So everything we're doing in regards to our analysis is still a prediction. Okay, so that now the next step for me is to start paying attention to where the wicks are. Okay, you guys know that one of my 15-minute strategies is about trading wicks or wick spaces. I like to then say, okay, if the market is now pushing up, or that's what I believe that the market is doing, then I'd start to look to see, okay, first, where are the wicks in relation to where the market's headed? So the wicks are down here. These wicks are higher lows that have been created. Okay, notice how this wick behaves around the EMA 200. Be mindful of these things. Okay, the other thing I do here is I'd grab my horizontal line and I will draw a line in at the very beginning of my day. So on a 24-hour day, here's where the Asian session began. This is what happened to the market. It fell in the first 15 minutes of the Asian session. So I draw this line in because sometimes this is what tends to happen with the market. This line, for whatever reason, gets respected more often than not. Okay, this one, although this candle open climbed up, this one here bounced off this line, this one here bounced off this line, this one here bounced off this line. This was probably too close, broke right through. This one bounced off the line, this one, this one. Um, I'm not saying that you trade these reversals all of the time, but certainly you can keep an eye on that and keep that in mind if you're looking to do a reversal trade off any of these candles. See, some of these would have won. This one, too close also. This one you could have considered taking the trade on and chances that you would have lost it. So please be mindful of that, but this is just an added piece of information. Okay, so I draw these lines in on my 15-minute chart everywhere. Also, whilst I'm on my 4-hour chart, if I'm not seeing clear WM patterns or a slight pullback, the V patterns that are happening, if I can't see anything clearly, then the next thing I'll do is make sure that I'm drawing in my support and resistance lines effectively. Okay, so when I have them drawn in, then I know, and what I would do is, let me just get rid of this fib. What I would do is, say for instance, this is my support and resistance line. Well, I'll highlight it, right click, go into trend properties, and I would make that thicker. Okay, I might even change it to another color. Say I've already got green, yellow. I'll leave it at red. Leave it at red. Okay, so make it thicker, and the reason for that is the daily chart. The reason for that is that when we're looking at so many lines on our charts, well, this one here, we're looking at so many lines on our charts. When you've got a thicker one that's present there, then you can know what that one's about. So if this goes up here and on my hourly chart or even my 15-minute chart, I start seeing that somewhere up here, I'll know that that is my trend line that I drew in on the on the daily chart, not the weekly one. Okay, so I drew it in on the daily chart. Notice how on the weekly one, it's doing exactly the same thing. So that's the analysis that's going on in my head. What I would then do, write down on my scrapbook what I discovered with every single one of these currency pairs, right? And then from that, so say for instance, I've got a nice big W formation happening on my 15-minute chart for Euro JPY, and all of the other ones correlate and there's clear confluence with them. I'd write that down and say, well, you know what, my Euro JPY currency pair seems like something that's familiar to me. And so for the rest of the day, I might just look at trade opportunities within that. Now, what that means is that if I see something that's familiar, there's a possible setup that's happening. In my mind, I'm still calculating it because this isn't just about saying I'm doing a 15-minute strategy, so that's all I'm going to do, which is just a 15-minute entry and exit. No, it doesn't work that way. What you've got to do is to say, okay, the criteria for my 15-minute entry works. What you then have to do is jump onto your different time frames and check out the confluence there to see if that actually does or can happen. Now, which pair was it yesterday? I did a trade on, actually it was this one here. So this was pound USD. Now, let me get rid of, again, fib. What happened here was that these green trend lines, okay, they were somewhere here yesterday, okay? And for those of you that have asked me what these red little circles are, what I've discovered is that they pop up when, say for instance, there's a trend line, these green ones, there's a dynamic trend line going through it, and then with new information, these change, or the location of them change, and so sometimes what they'll do is they'll leave the red circles. I don't know what they mean, but that's apparently what it is. So it was somewhere around here. Now this was, I do a candle count as well, 1, 2, 3 candles, and I would have thought chances are this one somewhere here, the market's going to bounce back from, right? So I was looking to do a 15-minute reversal off of here. So if I drop a vertical line on this one here, what I did was I was here somewhere and I'm thinking, should I do a 15-minute reversal on the next candle, right? And here's what I did. I'm looking at the clock, and first thing I'm seeing is this part of, or the second part of a 30-minute candle, or is it about to be the first part? And what I mean by that is this is the first part, right? So it's 11 minutes into the hour. Either I execute that 15-minute trade at the beginning of the hour or at the 30-minute mark of the hour. That's how I look at it. So what I did was I jumped onto the 30-minute chart, and this is where we're at, right? So what I thought was, well, hold on a second. Let me finish this 15-minute candle. And I looked at it and I thought at that point in time, this was still, I believe, part of the last 15 minutes of that 30-minute candle. And I looked at this, there was only 2 candles. Then I thought, no, hold on a second. Chances are these 2 candles need to confer with this one, meaning to say I usually look for a 3-candle movement. So I waited on a 30-minute chart for this 3 candles to complete, and then when that came to the end of that hour is when I took entry off of this candle, and I traded only for 15 minutes. A couple of reasons why I only did a 15-minute one instead of a 30-minute one. Although on a 30-minute one I would have still won, that would have been a very close win. The other thing to note is that in regards to what's going on here, this is still somewhat of a strong trend down. I don't see any sort of information from or signal from the market to say that this is going to be a push back up now. So although there's plenty of these wicks, this is still a pretty decent push down. So I would have, if I would have traded this candle, I would have lost that trade. So I had to wait for that market. And notice how here, with this green candle, the next one, which would have been the second 15 minutes of a 30-minute candle, notice how this only pushes up briefly, comes back down. Look at the wick on this. At some point in time, this would have been entirely red. So if I would have taken a 30-minute trade, if this would have finished any lower than this point here, I would have lost that trade. So I was very comfortable just taking that 15-minute trade right there. So you could take some of these trades. They're a little bit riskier, but certainly what you can do is ensure, with the benefit of the analysis that you're doing, that this is what the market's doing and there's going to be somewhat of a push back up. You can use your fibs if you want to. At this point in time, I don't know where you'd be drawing your lines in, but you certainly can use your fibs. Actually, what you could do is grab them, draw them from this point till about what this point might have been. Okay, or previous candles here. Okay, and then you're going to take note of where the market is probably bouncing from or to. Okay, probably won't help you too much there anyway. But that's generally speaking of what I do in regards to what's going on in my head. Besides where the wicks are and stuff, if I'm now jumping into the nitty gritty of things and if I'm looking to execute a trade, whether it's Forex or binary, I look now at candlestick formations, because what the candlesticks are telling you is a story. Okay, besides higher time frames and the confluence with all of these with what's going on here, the candlesticks are telling you a story. So say for instance, I jump onto the hourly chart and say for instance right here, where these dynamic trend lines exist, market comes down, it's bouncing off this trend line. I jump onto a 30-minute chart and say, hey, guess what? It's bouncing off a trend line here on a 30-minute chart. Let's jump onto a 15-minute chart. Wow, it's bouncing off a 15-minute chart as well. If all three of these are doing the same thing, there's positive confluence there. And so what I would look at doing is saying, hey, on a 15-minute chart, can I take a trade bouncing off of this? I might even jump onto a 5-minute chart. I don't usually like doing that, but see how it's doing exactly the same thing on a 5-minute chart as well, right? So you could, off a 15-minute chart, say, okay, I will wait for the candle to come in, hit, and then take a entry going up because it's doing exactly the same thing on every single chart going up. That's one way to have your trade confirmations. The other thing is I'm going to start paying attention to candlestick formations now. Understand what they mean when the wicks are there, when there's a red candle followed by this engulfing candle up here, where the high of this is higher than the wick of this and the body of this, that sort of stuff. That's why studying candlestick patterns does come in handy. Okay, and then after that, when I'm starting to see a pattern develop, I'm starting to see trend lines being hit. Where the market is still moving in line with what my predictions were in relation to, pattern formations, that sort of stuff. You've got confluence with your different time frames. The next step is to sit back and figure out what your entry would be and where would you like to exit, specifically when you're doing binary. So if I say I believe this candle is going to be a green one, do I want this to do a pullback and then take entry, or does my criteria say that because this is a green trend line and it's happening on every single one of these higher time frames, that I should be safe enough just to take a 15-minute call when the market opens, or this candle opens? Okay, is it 15 minutes? Do you do it for half an hour? Do you do it for 45 minutes? Do you do it for an hour? How long would you enter that trade for? If you do an IG or an ADEX, same question. How long would you enter that trade for? What to you feels safe? Okay, again, I look to see where my EMA 200 is, because chances are if there is going to be a bounce, I would also look to see where the middle part of this the dynamic trend line is. I've got Bollinger Bands on this screen as well, so I'd look to see where the Bollinger Bands are, and I may say, well, how many candles would it take for it to get from this point to possibly this point, where then you might get a bounce back coming back from here. Okay, so Your exit strategy is simply about where do you think the market will get to. All right, so that's it. I suppose that's as simple as I'd like to keep this video, and that's a inside look into my head in regards to what's going on with analysis when I'm looking at something. Okay, so if you can apply that to your way of trading, then I can say you'll be more and more successful. Please be more patient with your trades. Please be very selective with your trades. If you can do maybe 10, maybe 15 max a week of trades, then over the longer term, you're going to be a very, very successful person. And yes, um, as you study the charts, as you analyze it, as you're doing more of your demo trades and live trades, you will become a better trader. Just be aware that when you're feeling down, when you're tired, when you're exhausted, when there's stress in your life, whatever those things that may be, if you're not at your optimal game, walk away from trading. Okay, this is something that you want to do for the longer term. This is never going to be a short-term thing that's going to make you a millionaire overnight, because as well as you can make good money off of this, if at any point in time your criteria is compromised, or you're not at the top of your game to be playing, say for instance you've got some sort of a energetic injury, then chances are that you will as easily lose your trades and lose money. Okay, in this game, unfortunately, um, everything's stacked against us in terms of what the brokers pay out and how much they make when you actually lose a trade, to how much you make when you win a trade. So be very careful of that. Anyway, all the best.